What's up, traders? How is it going? It's Moses here. If you're a trader and you don't have a strategy that works for you, a strategy that makes you money over time in the market, then you're definitely not going to be making money from the market. And when you're not making money, guess what? You're becoming an unsuccessful trader. As a trader, you need to be making money from the market. So today, I want to teach you a very simple strategy, a very simple price action strategy that works not 100% of the time, because you will never get a strategy that works 100% of the time, but this strategy works at least 60% of the time, and it gives anywhere from 1 is to 1.5 to 1 is to 2 is to reward ratio, which is very very good. If you get a strategy that works 1 is to 1.5, 1 is to 2 reward, 2 is to reward ratio, and you get a 50% win and a 50% loss, definitely you are profitable. So this strategy works at least 60% of the time from my experience of using it. So this is a pullback strategy, and it is very simple, very very simple. Pure price action, no indicator, so or whatever. Pure price action, and it is very simple to understand. Okay, so I don't want this video to be too long. I will just dive into the strategy, and we go from there. Okay, so first of all, it's a pullback strategy, like I told you. When the market is moving, when the market is let's say, for example, in an uptrend, the market just doesn't move up in a straight line like this. No, it doesn't move that way. Okay, the market moves, do what we call a pullback or a retracement. It goes up again, a pullback and a retracement, a pullback and a retracement. So what I'll be teaching you guys today in this video, what I'll be teaching you in this video is how to catch the next move. Okay, this next move. Alright, so sometimes people don't know when to enter the markets. Most people do enter when a retracement is about to happen, and that is very wrong, because you go into loss and definitely you might hit your stop loss. Okay, so I want to teach you how to catch this next big move. Alright, this next move from the market, that's what I'll teach you in this strategy. Okay, so we have three types of pullbacks. Okay, we have three types of pullback. Okay, but before I go in, I will talk about the time frame to use. If you are a swing trader, definitely you want to use the higher time frames, like the daily time frame, the weekly time frame. But if you are a day trader, you use the daily time frame, 4-hour time frame, 1 hour time frame. Okay. If you are a scalper, use 15 minutes and 5 minutes time frame. Alright. So choose the time frame that suits your style of trading. For me, I'm a day trader. I like using the 4 hour and the 1 hour time frame. Alright, so but with this with the time frame I'm going to use here, we'll be using the 1 hour time frame so that you will get the point. Okay, so we have three types of pullback. Okay, we have we have the deep pullback. Okay, let me quickly write it. We have three types of pullbacks. Okay, we have three types of pullback. Alright, we have three types of pullback. Um, we have one shallow pullback. We have oh, we have shallow pullback, right? We have medium pullback. We have medium pullback, right? And we have deep pullback, right? So we have deep pullback, right? So we have these three types of pullback, right? We have the shallow pullback, we have the medium pullback, we have the deep pullback. So I will teach you guys how to identify a shallow pullback, a medium pullback, and a deep pullback. Alright, so first of all, let's start with the shallow pullback. Okay, let me quickly delete this. I think you get this now. Oh, okay, so when the market is moving, well, okay, I will explain the three types of pullback with the drawing I'm going to draw now. Okay, so that you get to understand the points. Right, so first of all, let me draw this. This is a move, a pullback, and we have another pullback. So when the market pulls back to this point, to the last higher high, or to the last high, when the market pull back, when price pull back to the last high, we identify it as a medium pullback. Okay, we identify this as a medium pullback. Then we have another move. All right, so when the market pulls back and doesn't come anywhere close to this last higher low, or I mean higher high, it doesn't come close to it, it doesn't touch it, we have something like this, for example, and we have a breakout. We identify this as a shallow pullback. All right, this is a shallow pullback now. Okay, that is a shallow pullback. Then when we get another pullback that comes close to maybe the last higher low, this is the last higher low now. When we get a pullback that comes to the last higher low, that comes close to the last higher low, or that comes into the last higher low, you identify that as a deep pullback. All right, so these are the three types of pullback we have. This one is the medium pullback. You can see it came close to the it touched the last high. This one didn't touch the last high. I mean, this one here didn't touch the last high. We identify it as a shallow pullback. We identify this one that came into the last higher low as the deep pullback. It's very simple to understand. All right, so this is the three types of pullbacks we have. Then how do we trade these pullbacks? How do we know when to enter into this kind of market? All right, so first of all, when you identify your high, when the market moves, creates a high, a low, a higher low, and breaks out, what you are expecting should be one of the three pullbacks. All right, you should be expecting a shallow pullback, a medium pullback, or a deep pullback. All right, so when you get a medium pullback, in this case you get a medium pullback, you see the market pull back to this last higher low, I mean higher high. Okay, this is just a high. Okay, I'm not calling it a high, this is just a high. So when the market pull back to the last high, you wait for a reaction. Okay, because this is a support, and you know that when support is broken, it often turns to a resistance. Okay, so support was broken here. You can see this is a support was broken and retested. What are you looking for? You're looking for the next move. Okay, so when you see the market come into this zone, you don't just buy blindly. No, you don't do that. Okay, because you don't know what is going to happen. You don't know if the market will react. You don't know if the market will bounce back. You don't know what will happen, because the market can easily continue going down. Oh, sorry, price can easily continue going down. All right, but in this case we get a bounce. Okay, so what do you wait for? You wait for one of these two reactions. You wait for the candlestick pattern or a double bottom. All right, a candlestick pattern or a double bottom. Now, what are the candlestick pattern you wait for? I personally use the hammer candlestick pattern. I'm sure you know what is a hammer candlestick pattern, or a pin bar. Right, I wait for a pin bar or an engulfing candlestick. So if you don't know about candlestick patterns, go and read the Candlestick Trading Bible. Right, go and read that book. Okay, you get to understand the different types of candlesticks we have. So when price get to this zone, you wait for one of these candlestick patterns, a hammer candlestick pattern or an engulfing bar. When you get an engulfing bar, then you enter. When you get a hammer candlestick pattern, you enter. But if you don't get any candlestick pattern, you don't enter. You wait for a double bottom. Alright, when you get a double bottom in that zone, you can enter the trade in peace. Okay, and set your stop loss and set your take profit. Alright, so that is it about the medium pullback. So we have the shallow pullback. Now this is the shallow pullback. Remember, it is not coming, it didn't come to the last higher high. Okay, so we don't know if this pullback is going to end. You cannot enter blindly. You don't know if it is going to end. Okay, so how do we trade the medium pullback? I mean the shallow pullback. How do we trade the shallow pullback? So shallow pullback, when you get this pullback now, you don't know if it is going to end here, because it can still come back to the last high, can still come back to the last high or continue going down. You don't know what will happen, so you wait. All right, you wait. Okay, so the confluence you need to see here now is when price breaks above Okay, let me put a horizontal line there. Okay, when price breaks above this, the last when price breaks above the high, okay, now you have gotten a pullback and price is going back up. Okay, you only enter when price breaks above this high. You don't need any more confluence, just a candlestick that closes above the high, then you place a buy. Okay, and you are going long. All right, so that is it about the shallow pullback. It's not that hard. You don't just enter when you see a pullback ending, or literally maybe you get a little pullback and you see the price going up and you enter for a buy. No, not that. You wait for the price to close above the last high. Okay, above the last high. When you don't worry, I will show you in the rechart. When you see this, you know that yes, this is a medium pullback. We are going up. Okay, so for the deep pullback, you know the deep pullback is the last one. So for the deep pullback, you wait for the same kind of confluence you got here. Okay, because when you see the markets pull back up to this extent, that means buyers are getting weak. They are getting very weak because the sellers are taking control of the market. So you don't want to jump in right immediately when you see price at the last higher low. No, you don't want to do that. Okay, because this is the last higher low now. You don't want to enter immediately when price get to this zone. No. Okay, you wait for a reaction. The same way you wait for a reaction here, you wait for the same candlestick pattern. Now I like to use trade confluence here. If I get anyone, I will enter. When you get a candlestick pattern, the hammer candlestick and the engulfing bar, or when you get a double bottom, all right, if you get a double bottom you can enter, or when you get an inverse head and shoulder pattern. All right, this three confluence I like to use them here, but I prefer using the double bottom and the inverse head and shoulder pattern because I mean, for the market to pull back to this zone, that means the sellers are in control. You need enough confluence for you to enter this market, for you to enter this trade, because the sellers can still continue pushing the market down because they have brought the market down here, meaning that the buyers are very weak. But if you get a bounce here, trust me, the bounce will be very, very long because the buyers will use their last strength to push this market up. Okay, so if you get a reaction here and you get your confluence here and you enter this trade, the buyers are going to push it very, very high. Okay, so you apply the same concept on the downtrend. All right, I mean, I can't really explain how you do it on a downtrend. Just apply the same concept on a downtrend. Okay, let me quickly do it for you. Okay, so um let's say we have this on a downtrend. Now we have this as our downtrend. All right, we have a medium pullback. This is our medium pullback here. Then we have a shallow pullback that doesn't come to the last higher, lower high. We have a deep pullback. All right, so this is now our listen. Okay, here we have our medium pullback. Then we have our shallow pullback, and we have our deep pullback here. This is our deep pullback. Okay, so you can see as the market move made a lower high, it breaks below the lower high. What are you waiting for? Three types of pullback: a deep pullback that will come here, a medium pullback that will come here, or a shallow pullback that will end somewhere here. Okay, so when you get a deep pullback, a medium pullback that gets back to the last low, that support we turn to a resistance. Okay, that support we turn to a resistance. So here now support is turning into a resistance, so you look for your confluence, a hammer candlestick pattern, an engulfing bar, or a double top, in this case a double top. All right, so when you get that confluence, you are entering the market. All right, so and when you get another move and you get a pullback that doesn't come close to this last high, I mean this last low, this is the last lower low. Now when you get a pullback that doesn't come there, you don't know if this pullback is going to end here, and you don't know if the market will continue going down. So you wait for your confluence. What is your confluence? When you get a candle that closes below this last lower low. When you get a candle that closes below this lower low, then you can enter the market. All right, you can enter the market when the candle closes below this lower low. Then this is for the deep pullback. When you get a deep pullback, you know what to wait for. Wait for an engulfing bar, a pin bar, or now a head and shoulder pattern, right? So that is it for the pullback. I don't know if I'm talking too fast. You can rewind this video and watch it, but I don't want this video to exceed 20 minutes or 25 minutes. We're already 15 minutes in the video, so I don't want it to be too long. So let me show you how this looks like in the real chart. Okay, let me quickly show you how this looks like in the real chart. This strategy, like I told you, it works very fine. Okay, it works very fine. All right, so, and again, I forgot to mention this earlier. Before you look for a pullback, before you look for a pullback in the market, you must make sure that market is trending. All right, in this case we have an uptrend here. This is a clear uptrend. Okay, when you are looking for a pullback in the market, make sure that market you are looking for a pullback in, it's trending, because you cannot start looking for a pullback in a ranging market. No, that's not good. Okay, you should avoid ranging markets. All right, so you look for a pullback when the market is trending. All right, so quickly let me show you here. We have um we have a medium pullback here. We have another medium pullback here. You have a lot of medium pullback here. Okay, so remember, when you are drawing your destiny, it is not just a line. Okay, it is not just a line, it should be a zone. Okay, first of all, let's talk about this. Let me quickly delete this line. Let me quickly delete this ones. Let's use a zone. Let us use a zone. Okay, let's use a zone. Let me bring out the rectangle, this thing, rectangle 2. Okay, so you should mark it out as a zone, not as a not as a horizontal line. Use a zone. Okay, a zone will make it look more better. All right, so you see, you can see now it's looking more better. Okay, so when the market made this high, it pulled back, broke the last high. Okay, let me delete this. See, the market broke the last high here and pulled back to it. Okay, we got a lot of range here before the market started going up, but definitely it went up. Okay, we can see this pin bar here. You can see, but you must make sure that that price comes to your zone. Okay, not close to your zone. In this case, just make sure that price comes to your zone. In this case, we had a pin bar here. We had a very good engulfing bar here. We also have an engulfing bar, also a morning star, but I don't trade morning star candlestick pattern. Okay, we also have an engulfing bar here, which is a good entry. But anyway, wherever you enter this market, you still make money with it. Okay, so I use an indicator called ATR, average true range, for my stop loss. Okay, so average true range for my stop loss. When you plot the average true range on your charts, okay, average true range, where is it? Okay, look at it here. You leave it at the default setting. All right, leave it at the default setting. So what happens is, when you hover your crosshair on a candlestick, you see the pips here. Okay, look at the pips here. No, look at the pips here. You can see it. So whenever okay, just be looking at that. Just look at here. Look at here now. Look at my this thing. Look at my case. Okay, so when you hover over a candle, when you place your crosshair on a candle, you can see the pip. The pip now is 66 pip. Okay, this is 66 pip. So what the average true range indicator does that is, it measures the volatility of a market. Okay, it measures the volatility of the market at that particular moment in time. Okay, the volatility of the market is what you use to place a stop loss, because when the market is very volatile, you don't want to place your stop loss very tight. You want to give it space. Okay, so you use that average true range. You can search up for average true range indicator on YouTube, or I can still make a video on how to use average true range, but I'm not going to explain that in this video. So when you hover your crosshair on the candlestick and you get the pips, then you place your stop loss. you measure the pips. Okay, in this case we have a 66 pip stop loss. Okay, let me use a ruler. Then use a ruler, measure from that point, measure from that point. You can see we have, okay, measure from that point. Let me take it back up until I get 66. Okay, somewhere here. Okay, this is 66 pips. Okay, that should be your stop loss, and your take profit, I normally do 1:2. Okay, you can use 1:2, and you find out that this trade would have been a very successful trade. Okay, look at it, market went up very much. Okay, this strategy works. Okay, this is pure price action. Okay, now you have another breakout. This is another medium pullback. So we have a high here and a breakout, and we get a retest. In this case we had a double bottom. All right, in this case you had a double bottom here. I took this trade, I personally took this trade, and it gave me a very good amount of money. So we have the first top, the first, I mean double bottom. We have the first bottom, we have our adjustment, and the second bottom here. I think I entered the trade somewhere here at this candle, and the market went up. Okay, that is it about the medium pullback. Now let me quickly talk about the shallow pullback. The shallow pullback is very simple. All right, it's very simple. Now what you want to do is, when the market, I also took this trade. Okay, let me quickly show you. So when the market breaks a zone, a particular zone, maybe a support or a resistance, note what I'm saying. When the market breaks a zone, okay, in this case this is a resistance, and the market breaks through this resistance, I don't know if I'll get a pullback or not. So what do? I wait for a shallow pullback, or a medium pullback, or even a deep pullback. Okay, so I didn't get any of those. So this is how the shallow pullback works. The shallow pullbacks can be only one candlestick. Okay, only one candlestick. In this case, okay, oops, sorry. So let me quickly bring this thing down. Okay, shallow pullback can only be one candlestick. Remember, price broke through this, broke out of this zone with a very good momentum. So I don't know if I will get a pullback or not. So when you get one single candlestick, in this case a red candlestick, when I get this red candlestick, I'm entering the trade. Okay, when I get this candlestick and I get a candlestick, another candlestick that closes above the body of that red candlestick, it is an entry for me. Okay, in this case this green candle closed above this, above the body, not even the wick, above the body of that candlestick. Then you wait for that candle to close. Okay, in this case this green candle was my entry. When the green candle closed above the body of this candle, then I entered at the next candle open, and I took, I mean it gave me 1:2, it gave me up to 1:3 this to reward, but I took 1:2. Okay, I took 1:2 this to reward. So that is it about the shallow pullback. You just want to see only one candle. Note that it must break a zone. The price must break a resistance or a support in the downtrend. In this case, a resistance. Price broke a resistance zone, and I got one candlestick that just pulled back. Then I wait for another candlestick that will close above the body of that candlestick, above the body of the previous candlestick. I will identify that as a shallow pullback. Then I will enter the trade. Okay, that is very, very simple to understand. Okay, please make sure you backtest this strategy on. Remember, this strategy works for currency too, not only synthetics, it works for currency too. So make sure you backtest this strategy and find out if it is working on the pairs you're trading. Alright, make sure it is working on the pairs you're trading. Now let me say something. If you're trading with the shallow pullback, okay, because it is just one candle that will pull back and another candle that will close above it, and you enter the trade. If you're trading with the shallow pullback, you get a lot of trades, you get a whole lot of trades, and you get a lot of wins and also a lot of losses. But trust me, the wins will be more than the losses, because the medium pullback and the deep pullback, they don't normally happen in the market. Okay, so you can get a pullback that doesn't even come close to the last resistance zone, and maybe you are waiting for it to come there, and before you know it, the market keeps moving up, moving up, moving up. You don't enter the trade. But with this shallow pullback strategy, you can enter the trade anytime. Okay, so this shallow pullback strategy will give you plenty trades and also give you plenty wins and plenty losses. But in the long run, your wins must be much more than your losses. Okay, that's a guarantee. I know the strategy I'm using. Okay, but make sure you backtest the strategy on your peers, on the peers you're trading. All right, so with that said, let me quickly give you an example of how the deep pullback looks like. Okay, let's look for a deep pullback. Okay, remember the shallow pullback must not be only one candlestick. Okay, what you want to see, well, it doesn't have to necessarily be one candlestick. No, you can get 2 candlestick, 3 candlestick, plenty candlestick. All you have to see is that you get a move and you get a pullback that doesn't come to this zone. Okay, that doesn't come to the last high, even if it is 10 candles, 15 candles, as far as it doesn't come to this zone and it closes above here. Okay, when it closes above the last high before that pullback, then you can enter. Okay, if you get 1 candlestick, fine, you can still enter. 2 candlestick, 3 candlestick, any amount of candlesticks you get, as long as it doesn't come into this last high, you enter it. Because if it comes into this last high, then you are trading a medium pullback, not a shallow pullback anymore. Okay, that is it. So let me delete this. Okay, so I'm looking for a deep pullback. Where can I see a deep pullback? Okay, where can I see a deep pullback? Okay, this should be no, don't like that. Okay, please, you apply the same concept on a downtrend. Okay, you apply the same concept on a downtrend. All right, I think I found one, because I cannot explain everything now on how to use it on the down. Just you flip it around. You understand what I'm saying? Flip it around and you apply the same concept on the downtrend. Okay, so this should be, oh my god, this is an example of a deep pullback. Okay, this is a resistance zone, and when price broke out of this resistance zone, okay, let me quickly bring this out. Sorry if this video is taking long. I want you to understand this. Okay, when we got this breakout here, we got a breakout here and the pullback, and we got an engulfing bar, and the market went up. After the market went up, what do we got? We got another pullback that came back to this last higher low. Okay, we identify this as a deep pullback. You can see after that we got a very nice engulfing bar. Candlestick here, and the market went up to the moon. Okay, so this strategy is very simple, very simple to understand. Okay, so apply the same concept on the downtrend. This video is already taking too long. I don't want it to exceed 30 minutes, please pardon me. So that is it for this strategy. If you have any question, drop them in the comment section. I'll answer them immediately I see them. Okay, so thank you for watching. You can turn on the subtitles so that you can hear you can read what I'm speaking. Okay, I'm speaking a little bit fast so that I can cover up. Okay, this is how the strategy is. Alright, so don't forget to like this video, don't forget to subscribe to this channel. I'll be dropping more videos on price action, how to trade price action, strategies to trade with. Okay, so this strategy works with currency pairs too. Okay, it works with currency pairs, not only synthetics. So I wish you good luck. Don't forget to share this video, don't forget to subscribe to the channel, turn on the post notification. I'll be dropping more videos on how to trade price action, okay, so that you will not miss out, and share this video with your friends. Alright, I wish you a successful trading day and a successful trading week, and also a successful trading career. Okay, thank you for watching. See you in the next video.